Hello traders, I just wanted to jump on here to show you the trade today, why we took this, and the importance of using the currency baskets that we use in order to kind of maximize our potential and um, not risk anything if we're not exactly sure why a move is happening. So as you can see here, the chart here we have, this is the yen. If we go to the yen chart, you can clearly see that the yen is in a downtrend. We're below the 50 and we're below the 20. However, that wasn't the case today. So therefore, this was a shorter term trade. This wasn't a home run. This was just a base hit. Because we shouldn't be taking bullish trades in this environment. That's the very first thing that you have to remember. This is not a bullish trend. Look at the slopes of the moving averages. You can clearly see we're in a downtrend. Therefore, the probabilities of this continuing to the upside for an extended period of time is very slim. If we go to our hourly chart, I marked this over the weekend. And what we can see here is we have an ascending triangle here. We have our resistance, we have a support line. Now, as you can clearly see today, we had a breakout on the open on the Sunday night or Monday morning for me. And we started to consolidate here. We had a nice run up and we had a consolidation. And if you look at this time, this was at 10 o'clock my time. So this is at 7 a.m. London. So therefore, as soon as I see this, I'm looking at the charts and I'm seeing this is kind of when I come to the charts. So what do I see here? Well, I see an impulse leg up and I start to see a consolidation. So therefore, we're above the 20, we're above the 50. Again, these are moving averages, but now we're on the 1 hour chart. So therefore, I didn't know, but the probability of the Japanese yen having an extended move up today was now favorable. So I was going to take this trade for a shorter term trade. Now, what to pair this with? Well, I actually paired this with the pound. So if we take a look at the pound here, I had this marked up as well. This is a kind of channel because it's been quite bullish recently. If we look at the daily chart of the pound, we can clearly see that we had this really nice run up. And then on Friday, we started to break down. So if we come across to a 15-minute chart, or even an hour chart to first, again here, what do we see here? This was last week. We see this nice run up. It's at the top of the channel. We had a nice, you could say it's almost like a head and shoulders a little bit here. But anyway, on Friday, we started to break down. We broke below that support and we rallied back up and then the seller stepped back in. So therefore, my kind of bias for Monday was that the pound is going to be short. And also my bias for the continuing of the week is that the pound is going to be short. I think that we're going to revisit some of these lows, but we'll see. So anyway, again, around the same time, look at this 9-10 o'clock here. So again, 7 o'clock London time. Well, we rallied back up in the morning. So I'm considering, we're below the 50 at this period, we're below the 20. Well, the pound for me is a sell, especially in intraday, because this is an hour chart. So we always use the moving averages, kind of one time frame above of what we are looking at, ensuring, well, are we below the moving averages? Because ultimately, if we're below the moving averages, then we are, we're in a downtrend. If you think below the moving averages, technically you're in a downtrend. Obviously you have to look at the chart, but it's a general rule of thumb. So therefore, the first chart that we wanted to look at today was the pound yen. Now here, as we can see here in the morning, I wasn't awake for this. We had this beautiful low base and we started to break out. I missed this. I actually missed this, unfortunately. Otherwise, a great entry would have been here. This would have been the first entry here. And that candle was bang on 10 o'clock and I wasn't at the computer. I like to take things slow on a Monday because normally you don't get these moves developing, especially after the weekend. I was expecting a bit more gaps, if I'm perfectly honest, but it wasn't quite the case. So I actually waited. We found our second entry. So this is what we call a low base. It's a low base because it's basically coming down. You had an impulse leg down, and now we're consolidating. We touch support and resistance. Make sure we touch that at least once. So we can say here, we have our support, we have a resistance, and then we have our resistance up here again. And we actually broke down. So this would have been the perfect entry. Normally in this scenario, you will always have downward pressure from the moving averages. So as you can see, the moving average of the 20 was starting to flatten out, and the moving average at 50 at this point was sloping down. It's a very good, it's one of the best setups you can have. The second best setup, that's what I call a low base. The second best for me, apart from a pullback or a bear rally in this scenario, would be a low and tight base. Now, a low and tight base is where we have a small impulse move like this, and then we have a very tight base that doesn't break the original last impulse candle. So if you look at this last impulse candle here and here, these four candles stayed in this range, and the fourth candle here just broke below it. This for me is a signal, and if we actually have a look at our CCI here, it was probably less than 100. This is also a signal. So the CCI there was at minus 147. So therefore that is an extra confluence that I'm able to take this trade short. So we did. We took the trade short, and I was actually didn't expect it to move this far, if I was perfectly honest. I got it around here at that 211 area. I exited around here on this candle. Actually, I exited on this candle here, and the move continued to the downside. Now, position strategies, could we have stayed in this move for longer? Yes, I personally wasn't expecting it to move this far, but now that I know the kind of direction, at least today, I'll certainly be looking for a continuation, perhaps a bear rally up back to this level, approximately just above the 50 MA, and a continuation to the downside. But I probably won't, because I don't think the yen is going to have another day like this. I think this was an impulse day, and I believe yen will continue down to the short side, but it is an opinion. But again, this was posted in the Discord, so I kind of wanted to share why and how you guys can capitalize on it as well. You know, some things all you really need is just a special candle formation, which could be what we had here in this scenario. You know, we had a low base here, and then we had a low and tight base. We broke below that. My rules is I cannot take it unless it's a minimum 3-1, which at this level. So I actually set a limit order at 50% of this candle, in the actual hope that this would happen, and it did. It did. So I actually got in, by like half a pip or a pip, and then it continued me to the downside. So for me, it was quite a good trade. Was it the best trade today? Probably not, because if you started to look, we had the New Zealand Japanese yen. This was in a clean downtrend as well. So we had a nice bear rally back up here around the same time. It broke below the parabolic SAR and it continued down. And for these, I always stay at the 50. So maybe I could have made a bit more if I was in this trade, but probably not. I got a really nice 3-1 on GBPJPY. And again, so this all comes down to why we use the baskets, and how the baskets can help up. Why is a currency moving? You have to always ask yourself, why is it moving? Well, is it moving because one currency is going up, or is it moving because the other currency is going down? These are all, you always have to ask yourself why. Because ultimately, you can have, for example, a currency that's going sideways, like the Canadian dollar, which I'm waiting for a short here, potentially if it happens. But if you look at here, for example, here, this is flat. This is in a range. Ideally, a trader doesn't want to be trading in this range. You want to see either a breakdown or or a start to rise. So, but if you traded the Canadian dollar and the Japanese yen, well, what do you see? Well, it broke down. The reason it broke down is because today the yen was strong. It's as simple as that. And that is basically the fundamentals of technical analysis of currency trading, is find the currency with the most strength and ultimately try and find the currency with the weakest strength, i.e. where is the money going in and where is the money going out? And then you compare the two together and look for your candle formation, look for your setup, whatever that may be, and take the trade. So I hope you found this helpful.